are live on YouTube, That Mortgage Show on YouTube. My name is Adam DeSantis. Take a look at mortgage rates real quick. We'll read an article from CBS News on the mortgage industry. I'll give my tidbits and, yeah, hopefully get a little bit of content out of it. Hopefully get some people watching and see where it goes. First thing we'll share is the 10-year Treasury. Take a look at that. So here we have the 10-year Treasury yield, 4.359, a little elevated. You can see it was as high as 4.4 just a few days ago, well, about a week ago. It got down to 4.3. Now, when rates were looking really good, it was below 4. So if you're in the market and you are thinking about refinance or home purchase, you want to keep an eye on this 10-year. See, look at this 10-year. If it goes up to about 4.5, rates are going to be getting higher. If it goes down to 4.1 or lower, you can expect rates to drop. If you see this in the threes, call your loan officer, call your lender, call your buddy who's in the business, and say, "Hey, what's up? How are rates looking? What are you thinking?" And that's when you should have your radar. If you're in the if you're in process for a refinance and you're waiting to lock for a purchase, and you're waiting to lock your interest rate, if this drops to 4.2, 4.15, I would jump on a lock. Interest rates are a moving target. So it is important to keep up with all of the things and make sure you have a lender that you trust that can help you navigate this and keep an eye on stuff. You don't need to be keeping an eye on things. Got an article I wanna highlight today. Its headline is "Mortgage rates are surging, foiling homebuyers' best laid plans." So the plans are foiled, not by anything really than the rates. It's pretty simple. Rates go up. Just there we go. Mortgage rates are surging, foiling homebuyers' best laid plans. Surging mortgage rates are threatening to wash out the spring home buying season. That would really suck. That would suck for real estate agents and loan officers. Spring is where, make hay with the sun shines. Well, that's spring for us. So a spring washout would be tough. And this wouldn't be great because that's where a lot of the transactions are happening. People are going under contract in April, May, and they're settling in June, July. Mortgages and real estate agents, they close the bulk of their deals and make the bulk of their money in those months. So a spring washout wouldn't be great for anyone. The rate on a conventional 30-year home loan rose to 6.46, its highest level since September 2025, Freddie Mac said. 6.46 is probably a little optimistic. You're probably looking at closer to 6.6, 6.7. These rates that they advertise online, they don't factor in what we call loan level pricing adjustments. So adjustments for credit score, down payment, loan type, primary investment, secondary, first time home buyer. So they don't adjust for those things. So it's like your raw rates. It's really not what people are qualifying for, unless you fit the small little niche that they're using to quote that rate. Borrowing costs have jumped sharply in recent weeks after having dipped below 6% in late February. The Iran war is exerting further upward pressure on rates by stoking inflation concerns and driving up government bond yields. Certainly true. You can look at the day before the Iran war started. The 10-year was that bond yield that we were just looking at was in the low fours, dipping below 4. Mortgage rates were in the high fives, 5.99, 5.875. Everyone was very excited. The war happened, oil prices surge, and fears of inflation, came to a head, and mortgage rates jumped. They're not trending up; they jumped up. There's a difference between when rates are trending up and jumping. They jumped up. I do think it's a momentary thing, depending on how long this war lasts. For aspiring homeowners, the upsurge in borrowing costs is a major headache. Definitely a major headache. Major headache. Before the war, it was like it could be a good, this is a quote, Before the war, it was like it could be a good buyer's time now, said Rachel Marks, a 41-year-old Brooklyn, New York resident who recently started searching for a home. Now it's like, nope, stay away because everything is just going up, up, up. In the last week, everything is mortgage rates are going up. But if you look at the last 3 years, mortgage rates are going down. Rachel, if it were 3 years ago, your rate would be 8%. Everything isn't going up, up, up. One part of the equation tends to go up, 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 and that's the home prices. They tend to go up over time and not come back down. Mortgage rates are volatile. I wouldn't wait simply because mortgage rates are going up. The home values are going to continue to go up no matter what. So, mortgage rates going up, it stinks. But if that's your qualifier, home values and mortgage rates going up, if that's the only thing that you're taking into consideration when buying, then you're setting yourself up for failure, in my opinion. As of Thursday, the 10-year Treasury yield was 4.26, up from 3.96. We just touched on that a minute ago, just before the yeah. When inflation goes up, investors in bonds, and that includes mortgage-backed securities, demand a higher return to compensate them for that increase. They demand a higher return, so they can't just say, "Hey, give us a higher return." What they do is they stop buying mortgage-backed securities. They stop buying Treasury yields. As investors buy the 10-year Treasury bond, it drives the price down. So here's a quick look at mortgage rates over time. So you can see, I wouldn't say that this is going up, up, up. I mean, it's up from all-time lows during the pandemic. You got to throw this chunk out. You got to throw this chunk out. But here, we've got a little bit of upticks, downticks, upticks, downticks. Really, what this shows me is you just got to keep an eye on it because you could catch a dip in a 45-day window, a purchase contract, a refinance processing timeline. You could catch a dip and you could be at 6.25 and then catch a 5.77. It can happen. The direction of monetary policy is also weighing on housing market. Some guy said, with inflation seemingly stuck above the Federal Reserve's 2% annual target rate, a growing number of economists and Wall Street analysts now predict the central bank will refrain from lowering its benchmark rate in all of 2026. This is tough because Wall Street analysts 2 weeks ago were thinking that the Fed was going to raise rates, and they changed their tune, and things calmed down, and so just what I'm getting at is these people just they make predictions based on what's happening week to week, a jobs report, an attack in the Middle East, an inflation report. So these things change, and the outlook for a year or the next 2 quarters of a year change. So take that with a grain of salt. Quote, mortgage rates will remain elevated above 6% in part because markets are pricing higher expected inflation in long-term rates. Economist with PNC Financial Services predicted in his report this week. The talking heads and whatnot were always saying that this year was going to be in the sixes, 6.25, 6.125, 6%. 5.99 that we had a couple of weeks ago was a gift. I think that rates are going to average around 6.25, and like I said, you can catch a dip. Something positive happens in the economy. This Iran war stops. We could see rates dip. You could jump on it. Moving on to the article, $95,000 difference. So it's a headline within the article. It says $95,000 difference. Let's see what that means. Prospective homebuyers are now grappling with the impact of an unexpected jump in mortgage rates. Devin Post, a 36-year-old corporate controller in Minnesota who's in the market for a home offering more space for her family, thought she had found a property that ticked all the boxes. A lender initially quoted her a rate of 5.85% for a 30-year fixed-rate mortgage, she told CBS News. But before she and her husband could jump on the offer, the Iran war erupted. The lender's latest quote was 6.49%. So, I mean, yeah, that sounds about right. I mean, I have clients that this exact same thing happened to. I think we got a quote in here from her. Let's see what she has to say. Post and her husband recently put an offer on another home. They're still out in the market looking. While they're one step closer to buying, she said the additional mortgage costs they face are discouraging. Definitely discouraging, but could be a blip in the radar. Keep an eye on things. You feel like you're finally going to be entering the market when things are going your way. Like rates are finally going down. We can actually afford a nice house, she said. And then it's like, oh, wait, never mind. I mean, I agree with it. I agree with her sentiment, but I don't, again, 3 years ago, rates were in the eights. 2 years ago, they were seven. So, put it into perspective. Yeah, last week they were 5.85, or 2 weeks ago, 5.85, and now they're 6.5. But you got to put it into perspective. And this also goes to the point of if you're in the market and you do find a house that checks all your boxes and you do have a rate that you're comfortable with, you need to lock it in. You need to jump on it. You need to put the offer on the house. You got to be aggressive. And by aggressive, like, what's more important to you? Offering 5,000 over asking and securing the home while the rate is available that you want, or like being super sharp on price and potentially losing out on a home and then rates go up. You got to be thinking about these things. It's really a volatile market. You need people in your corner, agents, lenders, that can help you. If the couple locks in at 6.49 and put 20% down, they would pay an extra $265 per month compared to the lower rate they were offered last month, according to Realtor.com. That comes to, here we go. Here's the 95,400 over 30-year loan. Yeah, if you take 265 times 360 payments, that's where they're getting their 95,400 difference. But nobody's holding these loans for 30 years. Like, it just doesn't happen. So it's a little unfair to, you know, throw out the 90. It's scary. It's a fear tactic. It's clickbait. It's sexy. I get it, but it's a little misleading because most likely they're going to be in the loan for a year or two and refi. Be in the loan for another 3 years. Sell the house. Move. Do a cash out refinance. Whatever. That's a tough metric. The life of the loan. A weaker spring season. Let's hope not. Higher mortgage rates coincide with the start of the spring home buying period when demand normally starts to pick up. Experts had predicted a strong season, pointing to modest increase in inventory, momentum in new construction, and lower year-over-year listing prices and lower rates. The housing market was also eager to turn the page from last spring buying season when President Trump's Liberation Day tariffs sparked inflation. Let's finish this article real quick. I had a phone call. Liberation Day. Yeah, last spring was disrupted by Liberation Day, which, can we just chill on the spring? Like, let's do this stuff in next October. Next war we start, let's do it in October. Next time we want to put the global economy on tariffs, just wait till the fall. Kids are already in school. Nobody's trying to buy a house. And then by the spring, when I need to make money, everything's good. This is going to be the year that the markets rebounded in a noticeable way. Conditions were forming for improved affordability. They certainly were, and they still are. Inventory's rising, so you got more houses coming on the market. You got more sellers listing their house, and you've got borrowing costs are less than they were last year. They're more than they were 2 weeks ago. They're less than they were last year. So perspective. Higher mortgage rates have muddied the picture. They have in the interim. We'll see. Um, the Iran war's effects on the housing market will likely send many buyers and sellers to the sideline. I don't disagree with that. Look, buying and selling a house is a big thing to take on mentally. So when there's a war going on in the background, or there's tariffs going on in the background, or anything that takes up a lot of your mental space. It's probably hard to compartmentalize and go, I'm going to buy or sell my house, do this big thing while this global, crisis is going on. Let's see how things go. Keep an eye on the 10-year. If you're in the market, call your buddy. If you got a buddy that's a mortgage lender, call them. Say, hey, what's going on with rates? They would love to talk to you, and they can give you information, give you insight. If you need anything with mortgage, if you're a real estate agent that has clients that could use talk like this, if you're a buyer yourself, you're looking to refinance, please reach out to me. My contact info is on my YouTube page, Instagram. Email me, call me. Hope you have a great day. Thanks